Hello everyone. Have you ever wondered why bad things happen to good people? We live in a society which is very superstitious. And today I want us to talk about building an emergency fund. If you're meeting for the first time, my name is Felix and you're welcome to mindyourfinance.com. So, building an emergency fund. Due to this pandemic, COVID-19, so many people lost jobs. Many people have lost their loved ones or their sole breadwinner. And we've seen people, or even before this, I know and I believe that at some point you've seen people losing their jobs or their income from their businesses. Then, after that, they live a very challenging life, a life of begging, a life of struggling. Some even have to relocate to their villages. And because of this, I think it's very necessary for us to talk about an emergency fund. So in this video, I want to share the steps of building an emergency fund. And it's very important for us to know that a smart and financially disciplined person don't like, actually most of them, they have one thing in common, one characteristic. They don't like money surprises. So because of that, they build their emergency fund so that whenever things go wrong, the emergency fund will cushion their life, will work as a safety net to cushion them when things go as unexpected. So I want to share the steps we need to follow or we can follow to build an emergency fund. And the first step when you want to build your emergency fund, the first step is you need to calculate the amount you need. And this amount is the amount which you will need to survive in case you no longer have a job or in case you don't have an income from your business. When it goes down, what is the, in other words, is the cost of living per month. So, and when you're calculating the cost of living or your cost of survival, you need to factor in the cost of rent if you're paying rent and utilities. You really need to take that into consideration. So let's say that after getting the figure, let's say maybe your cost of living or your cost of survival per month is let's say 60,000. After getting that figure, then multiply that by at least 6 months. And that would mean that it will cushion you for the next 6 months. So if you don't have a job today, you report to work and you're told it is over or you are retrenched or your business goes down, for these 6 months, you can be able to re-strategize, but at least you'll have something to sustain you as you look for alternative ways. So calculate that amount, then multiply it times at least 6 months. If you like, you can even multiply it by 12 months or 9. So at least that one you'll have a strategy or something to protect you for at least 6 months as you're looking for other avenues or another job, if you like. Then the second step, the second thing you need to do after knowing exactly the amount you need in your emergency fund, the next thing you need to do is define what emergency is to you. You really need to define clearly what is an emergency. Because, you know, some people would treat maybe upgrading a phone as an emergency. Or let's say this impromptu trip to Dubai. A friend of yours tells you there's something in Dubai you need to travel. And somebody would even consider this nice dress as an emergency. No, those ones are not emergency. So define clearly what you consider to be an emergency. Let's say maybe if you have a car, your car breaking down, that could be an emergency. Or if you have to pay for an hospital bill, you know, this urgent, this abrupt hospital bill, which you have to pay either for yourself or your family member or someone, that one would be an emergency. So define clearly what is emergency according to you, so that you don't touch this money after building this emergency fund. You don't use it for wrong things. So define clearly what you consider according to your standards to be an emergency. Then after doing that, then the next thing you need to do, the next step is look for any way of adding up or building this emergency fund. In other words, for example, we are in December, right? So if you get bonuses from work, or whenever you get this money which you didn't expect, you can say, at least 20%, you can send that to your emergency fund. Or if you can send more than 20%, that would be great. So any unexpected money you receive, let's say bonuses, or even overtime, if you work overtime, you can channel those monies to your emergency fund. That would help you to build it faster. Then after doing that, then the next thing you need to know is, actually you really need to understand that an emergency fund is not there to give you returns. So let's say that maybe you've accumulated, you've built your emergency fund and you have some good money in that account. Then a deal comes. Let's say there's a stock you feel like buying. My advice is, don't invest your emergency fund in risky stocks, in risky assets like stock. Don't. An emergency fund is there to work to offer security to you when things don't work right, but it is not there to earn you money. So don't invest an emergency fund in risky assets in the name of returns. No, it is not there to earn you money. It is not there to get you returns, but it is money set aside to help you in case things don't go your way, in case you lose your income. That is its work. So don't even think of investing it in any avenue, in any asset which is risky in order to earn more money. No, that is not its work. Then another thing with the emergency fund is that, which I would say the last thing is, ensure that this money, save it into high interest earning accounts. You can look for high interest earning accounts and put the money there. So as the money stays there, because you never know, it can stay there for as long as, let's say, forever. It can stay there for as long as 2 years, 10 years, or whenever there is no emergency, for as long as possible. So as the money stays there, if you choose or you look for high interest earning accounts and you put the money there, at least it will be earning you some interest. But at least the capital will be safe, because the capital will not be touched, but you can now use the interest which it is earning you. So don't just put it in any account. Look for high interest earning accounts and deposit the money into that account. So basically that is what I wanted us to share today. And before I say bye, before I conclude, I would like to reiterate that emergency or bad things, as I said earlier, bad things happen to everybody. So when you see somebody you know, when you see families lose their sole breadwinners, then they live life of begging, they live life of struggling. Don't say, God forbid, not me. It's okay. Just use that as a lesson and take the right mechanisms. And that is, start building your emergency fund so that when something like that happens to you, you will be safe and you'll not be affected badly. Thank you so much for watching this, and you can share with someone, and know very well that your religion, your tradition, or whatever beliefs you have nothing to do with emergencies. Emergencies are there and they're so real. Build your emergency fund. Thank you for watching. Till next time, bye.